So we're going to move swiftly. I've just been backstage with our next guests, and we've got a fantastic lineup for you there. So our next session is on stablecoins, innovations beyond DeFi. Emerging as a cornerstone of the cryptocurrency ecosystem, this discussion will explore how stablecoins are not only enhancing the functionality and appeal of digital finance, but they're also driving a broader adoption of blockchain technology across traditional finance systems. So I would like you to give a very warm welcome, put your hands together, because we are going to be joined now by co-founder and managing partner at 9 Blocks Capital Management, Henry Arcelanian, who will be leading this session. Please put your hands together. Henry. I have a feeling they're still talking backstage, briefing each other. Luke, our moderator, to the rescue, I think. I think he's just gone to tell them. Please do keep the conversation going, by the way, on all your social media channels throughout the day. We don't want it to just remain in this room. The whole point is for us to get out there, get the message out. Also, of course, as we mentioned, we will have lots of networking opportunities throughout the day. We do have a few more sessions this morning, and then we will be letting you head for a bit of a lunch break ahead of our afternoon session. And of course, we have our awards, which we'll be celebrating this evening, and the after party, which I've been told is one not to be missed. But we do have a lot to get through before that. So once again, please put your hands together.
Excellent, thank you very much.
Go for it, Henry. The floor is yours.
You guys come in, come in. Excellent, thank you very much. The panel can come in as well. Sorry guys, we're waiting in the back. Very, very excited to be here with you all today to talk about the very exciting topic of stable coins. You guys consider perfect, excellent. We're going to cover really a lot of developments with the broader stablecoin ecosystem going on. I mean, the stablecoins just crossed 170 billion in assets, and we'll talk about a lot of the latest developments that we need to know. I cannot promise you we'll cover everything, but I promise you'll be insightful, interesting, and most importantly, exciting. And the reason because of that, we have a dream team panel today to cover the topic on that perspective and go with us and discuss the various topics around it. Let's start on the left side. Normally I start ladies first, but this time let's start with Peter on that side. Peter Martino from Morningstar Ventures. He's an experienced Web3 marketer and growth hacker with years of experience in launching successful user acquisition campaigns for crypto firms. One thing you may not know about him, by the way, he's a massive chess player. A lot of people in crypto who are chess players as well. So great to have you with us today, Peter. Next is Giovanni Iverdun, who's basically a DeFi maxi working in banking and serving as Chief Strategy Innovation Officer at CBI. The one interesting fun fact about him as well is despite the fact he works for a TradFi firm, he's again a maxi DeFi degen. So good to have you on board today, Giovanni, as well. A lot of degens in the room, I can see that. Kokila, of course, Kokila from Karm Legal Consultants. As a founder of Karm Legal Consultants, a really seasoned corporate, commercial, and technology lawyer with over 20 years of experience. There's a lot of interesting fun facts about Kokila. What's your favorite fun fact about you people don't know?
People don't know I can sleep with my eyes open. See?
What?
I can sleep with my eyes open.
You can sleep with your eyes open. Very useful tip in crypto, by the way, with the way markets operate, Kokila. Great to have you with us. Miriam Kiwan from Circle. She's the VP for Middle East and Africa at Circle. She was previously spearheading innovation and tech at ADGM. Fun fact about Miriam, by the way, she used to be a competitive swimmer. Very big attribute. People get that in crypto. It's a competitive nature on that perspective. And last but not least is Dongjun DJ Choi from RAK Bank. He's a Chief Customer Officer at RAK Bank, leading customer and strategic analytics function. What's the one thing about you, DJ, people don't know?
I love cooking Korean food.
Korean food. Oh, man. That's a tough one to do. So great to have you guys on board today. There are a lot of things we'll go through on that perspective. Miriam, I'm going to kick it off with you immediately. We're obviously in the Middle East. Stable coins just crossed 170 billion in assets. Actually, USDC is over now 25 billion in assets. What are you seeing in the most practical use cases of usage of stablecoins in the Middle East and regionally?
Thank you, Henry. So probably I'll focus on 3 use cases that we're seeing here in the Middle East and Africa. B2B cross-border is probably one of the biggest, especially if you consider the flow that goes between APAC, Middle East, and Africa. And if you look at the use case here of stablecoins, it's cheaper, faster, more efficient. It helps companies to programmatically improve their transactions. Retail remittance, again, is another important use case, given we're sitting in the second largest outbound remittance corridor in the world after the US, which is basically...
On the remittance side, very interesting.
Yes, absolutely.
Put your mic closer as well so they can hear you well.
Yeah,
Perfect.
so that's the second one. Obviously, treasuries is another one, and this is linked to the B2B cross-border. And of course, store of value. We're seeing this in economies where you have hyperinflation, devaluation of local currency. If you look at Turkey, Lebanon, you know, sort of African nations, it's a perfect, stablecoins are the perfect sort of hedge against inflation, and we've seen huge growth in that space.
And that's not going to go away, unfortunately, anytime soon on that side. So obviously the remittances, a lot of use as a store of value and remittance as well. Maybe Peter, I'll move it to you. What are you seeing on the use of stablecoins in the DeFi space right now?
I think stablecoins are unlocking opportunities that...
And put the mic closer to your mouth.
Sure. Stablecoins are unlocking opportunities that people, especially retail investors, never saw before. So access to complicated financial tools that you never had without being a qualified investors in different countries, and also for some simple tools that are also not available for many people, especially in emerging markets, because especially with the lack of trust in national currencies in the emerging markets, people see DeFi as a great alternative for basically storing their value and multiplying their value. And last but not least, the fundraising opportunities via DeFi. So we have a rise of like crowdfunding investments via DeFi pools, smart contracts, and then people, it simplifies access to stock market, to synthetic assets, to any type of assets and any type of crowdfunding that using any type of stable coin and like 2-3 transactions, DeFi, even sometimes without a KYC process, you can get, you can participate in fundraising and crowdfunding of pretty much very innovative and great projects, both in Web 2 and Web 3.
And I want to talk more also on DeFi afterwards, some of the new trends we're seeing on stablecoins as well with Ethereum and other treasury tokenized assets as well. We'll come to that in a second. I want to move it to Kokila on the regional side, right? Because there's obviously numbers are growing. Unfortunately, in countries like Turkey, Lebanon, for the wrong reasons, people don't trust their local currencies. We're very lucky here in the UAE. We have great central bank. People trust the currency. It's a peg currency and so on and so forth. There's been recent guidance from the central bank, which I think very, very interesting. Can you maybe share with our audience what do you think the practical impact would be of that new central bank stablecoin regulation and what the impact could be in the UAE?
So the payment token services regulation that came out with central bank is something that's long awaited. This is the only use case which I think in a very regulated segment is going to work for crypto payments as such. So for any central bank to look at crypto payments and saying we're going to regulate virtual assets, no, they're going to start with stablecoins. And interestingly, we've been in discussions with the central banks in the region in trying to understand that when it comes to the retail use cases, how is it going to play in? Will I be able to do a retail store and pay my BTC for a dresser? Most of the central banks are like, of course not. This is not in our payment monetary system. So stablecoins is the solution with which they came and said that this is what we regulate. This is my monetary system. You're in my payment ecosystem. And this is where these regulations play an important role. And if I can be extremely honest, which I like to be on my panels, stablecoin regulations from central bank, we still need to see the virtual asset regulators like VARA, understanding even from ADGM, how are they going to help their VASPs to get in harmony or understand that how the regulations are going to work. So the regulations give you the framework that if you're a foreign stable coin, how do you get an NOC, you come in our ecosystem, how you can be an AED-backed stable coin. But then we have the existing VASP rule already sitting here and dealing with foreign stable coins. That link is something that we need these regulators to start working together.
So I think you mentioned two interesting points. One of them, there was a lot of misunderstanding in the market when these new rules come out. I was seeing things in the media saying UAE is banning crypto, stablecoin payments. Journalists who don't understand crypto or don't read the rules very, very important. But I think, like you said, I cannot go to a restaurant in Ras Al Khaimah and try to pay in euros or US dollars, right? So the same way, I mean, no central bank should accept somebody to pay in Tether, for example, right? Or Circle for day-to-day payments. Let me be careful with the sponsors today. And I think the point you mentioned with coordination with regulators is going to be very, very key, right? Because of the dynamic we have in the region on that perspective. You know, when these rules came out, my first reaction was the banks will probably benefit as well. I mean, the banks are not stupid as much as we think in the crypto space. And this is obviously an area they may want to enter into. I'll move it to you, DJ. I mean, what's your view on, I think asking the question whether banks will get into the stablecoin business is a bit of a rhetorical question. But how do you see the banks' interactions with stablecoin and the future landscape? And then I'll move it to you, Giovanni, on this.
Thanks. I think we probably need to take a step back, right? If you think about how the ecosystem for digital assets can grow, there has to be a lot of, how should I say, money flowing from the fiat space to the crypto space. And I think there has to be that transfer of value from one to the other. For that to happen, I think people need to be able to send their fiat and so the on-off ramping has to become much more seamless. And then they have to be able to have some use cases around the stable coins. So for instance, like they have to be able to pay, they have to be able to hold it, they have to be able to trade with it. I think if you think about the broad adoption that needs to happen for the whole space to grow and the ecosystems grow, that adoption relies on people trusting that this could work, right? And until now, if you think about it, the adoption was driven by people who had very unusual risk appetite. If you go to the common sort of end users and say, look, are you willing to take crypto as an asset class and invest in it? Are you willing to use it as if you would a fiat currency? There will be people who are believers who will say yes, but a lot of the vast majority at the moment as it stands would say no. And the reason I think is because of risk appetite. There were lots of incidents in the ecosystem that have the normal end users to hesitate. And I think that's where banks can come in. Because banks, if you're thinking about a stable coin, for instance, which is DRAM denominated, which is local currency denominated, which is regulated by the central bank, and then issued by a bank that people can trust, and then can be stored together with your fiat next to each other and can be operated within the same app. And then the adoption and the willingness to take this on and then start using it gets to a very, very different level. So I think, you know, we don't think we'll be, you know, necessarily competing with the existing players if the banks sort of get into this space, but we would be able to address a section of the population who would otherwise not be sort of adopting this on, and then create sort of new opportunities and new flows into the sector.
Yeah. But not to interrupt, but I think to kind of give a counter argument, if you look at the recent DPEGs we had on stablecoins, forget Luna, we look at the USDC DPEG that happened a year ago where it fell to even 89, 90 cents, was because of the banks. Huh? It was not the smart contract operated very well, all the DeFi even coins operated very well. The bank was an issue. But just on that point, I would move it to you, Giovanni, because if we're talking about AED stablecoins, we'll talk about dollar stablecoins in a second on the trading pairs on exchanges. But if we're talking AED stablecoins, in the UAE, my payment apps work very well for dollar payments, for the banked population, right? What do you see the real use case for AED stablecoin? And how do you see this is going to interact with a potential CBDC where the CBUAE is working very closely on?
I mean, that's a great question. Like, if anyone knows the answer, I'd be very happy to hear that. Because, all jokes aside, I think if you think about it, right? You know, a dirham stablecoin is a stablecoin on a stablecoin, because the dirham by itself is effectively operating as a stablecoin pegged to the dollar. And if you look at it specifically on, you know, central bank during their CBDC at some point.
Bring closer.
Yeah, but I think it's shut.
The mic is not working. So I think can we
I'll switch
mics?
mics. I'm getting censored. This is my Elon moment. So if you look at a dirham stablecoin specifically in the context of a CBDC, you know, I was recently in Kazakhstan, and what the government did there, they're quite advanced. They rolled out their CBDC for retail, and guess what? There's no adoption. Why is there no adoption? Nobody wants the government in their money, literally in their money. And so what they're looking at now, they're building out a framework where commercial banks issue stable coins that are then backed by the CBDC, right? And it's an interesting way of working at it, because effectively the government still gets what they want, but as a user you feel it's like, you know, back to DJ's point, it's issued by the bank that you trust. To your point, you know, this conversation about use cases, I think there's use cases in specific areas that are very obvious: fighting hyperinflation, capital flight. To your point here, I think there's different use cases that need to be developed, and I might leave that to DJ, because I think RAK Bank is already working on that. But what I would just say generically is this: we need to stop talking about use cases. If I ask if you know how TCP/IP works or IMAP, none of you, probably some of you, most of you won't really know. And you don't need to know, but you know how to send an email and you know how to access a web page, right? Stable coins for me is under the hood tech. You don't have to explain it, it just needs to solve a purpose. Who the hell cares what stable you use to transmit the money? At the end of the day, you want to walk into a restaurant or to a store and pay, because you have a balance and you pay from that balance. You want to send money, you send money. And by the way, Miriam, I fully agree. Cross-border payments, remittances for me is probably the biggest use case right now for stables, right? And again, behind the hood, because the people that send the money don't care if it's fiat, SWIFT, or stables. And so solve real problems, and then the technology will make sense. If you have to explain the use case, you're kind of lost.
Absolutely. I mean, it's interesting. The remittance field, there's no brainer. But I would argue, don't you think there's a use case, or like the reason Tether has hit 120 billion in assets, let's face it, a lot of people want to get US dollar exposure without touching the US. I mean, the only Tether exposure in the US now is the treasuries that are managed by Cantor Fitzgerald, right? But let's say, can't the AED stablecoin play that role? I want to have, as a store of value, right? I mean, it's for trading pairs, it's a different issue. I want to hold US dollar exposure without touching the US. AED stablecoin can do that role.
It would, but if you're looking at it purely as a store of value, then the real argument would be, why would you not use USDC? Let's go to USDC, because Circle's here. Why would you not?
Touches the US though. There's a US nexus.
Okay, so you go for USDT, which is anyway the main on-ramp and off-ramp, right, for stables. That's really the primary use case. So my point is, it makes sense for me if you're in Nigeria and you want to, or in Pakistan, and you want to have access to dollars, and you're prohibited from, or there's a cap on the amount of dollars you can keep. So you have an instrument that operates like an ETF, really, right? But beyond that, I think the real use case for the UAE would logically have to be payments. It would have to be you being able to utilize on-chain currencies, whatever you may have, and use them on an ongoing retail basis to, I think, DJ, you talked about, you know, you have an app and you have fiat. That for me is the use case. So people don't really have to think, and you can use it for payments. As a store of value, I mean, non-financial advice, hold Bitcoin.
Here we go. That's a proper D10 message, you know. For hyperinflation, we fight it with BTC. But Peter, I want to move it to you because, you know, let's say in our hedge fund, of course, Tether is or USDC is a currency we use a lot because it's our trading pairs are based on these assets, right? I don't know what percentage now of global trading pairs on exchanges are on stable, vast majority, of course. But what's your view on the success? Let's say, look at the DeFi side, right? Let's look on that side. We're having the very rapid rise of tokenized treasuries. Biddle, for example, crossed $2 billion. We're having a lot of conversations of other players coming in the market. How do you see that playing a bigger role? And could these tokenized treasuries be the stablecoin killer?
Yeah, I think overall that we see this like more tokenized assets, and we all call it like RWA sector, and everyone in crypto is anticipating when BlackRock will tokenize as much as they can and bring this liquidity and to the market. And basically that's a great point of connecting TradFi liquidity with Web3 liquidity, because a lot of people or a lot of funds or institutions or whales who made money in crypto, they want to have exposure to real life assets. And a lot of fund managers or institutions or banks from TradFi, they want to have exposure to crypto. And assets like treasuries from BlackRock or other like tokenized stocks or treasury like bills can be this unified point. And stablecoins can play a role of basically payment rails for all this communication in liquidity from Web 2 and Web 3. I will agree with Giovanni that stablecoins can also be made for payments and not as for value. They will not compete, but they will basically leverage on each other as being a connection between TradFi and Web 3 liquidity.
But why would you keep that as a, if you really care about a store of value? Why would I, can I use your mic, DJ? So let's make the mic, we're talking about the future of money. First, we need to fix our mics, you know? If we're talking about if I'm going to using USDC as a store of value, why would I not hold and BITO as a store of value and get the embedded, whatever, 4 or 5% yield that now circulars and half of it is going to Coinbase, right? Like, why would we not even hold that as a store of value if we want to use it?
Because using USDC, you have access to more complicated, more risky financial tools, but having USDC, you can put it in, I don't know, in some yield farming protocols, in some pools on Uniswap or whatever, and have not 4 or 5% guaranteed returns, but have a higher returns. Of course, do your own research, and this is more high risk investments. But at the end of the day, USDC gives you more flexibility on how you can, or any other stablecoin, how you can generate yields from that.
What do you think of this, Miriam? Do you agree or no?
I agree with him. Yeah, I think so. I think USDC is mainly sort of used. It will not be used in the case of farming, for example, or it's more BITL. It's mainly done to sort of redeem shares 24/7.
It would be interesting to see when we will be able to use this tokenized RWAs as a collateral in DeFi protocols. That can reshape.
It's a matter of time. Why would for sure it's a matter of time. I don't see why it would not be the case, right? Like Etina, what's your view on tools like Etina, for example, right? So there's a lot of these things coming up.
I think this is just a question of like competition between stablecoins, that some people think that it should be completely decentralized and they want to maximize capital efficiency used in the stablecoins, not just to have a amount of cash somewhere laying and then minted in the stablecoins, but something different. But these are like just different approaches, but whatever helps with the adoption of stablecoins at the end of the day, people don't care how they're minted at the end of the day.
What do you think, Akila?
Yeah, just to add on that, when we're talking about stablecoins like Ethereum, it's still a long way when it comes to regulations. You still have the payment token regulation since we ban algorithmic stablecoins. So we still are debating how you're going to classify Ethereum. What is it? Is it
it's a good point, actually.
I want to make a point on that as well. Yeah. I think not all stablecoins are made equal. Yeah. We both know that. So I think when you position, for example, USDC or Ethereum, Ethereum cannot even circulate in UAE.
Good point. Very fair point, actually.
But I also want to go back to the point about sort of local stablecoin versus foreign. I think for us as a global foreign issuer, it's great to have an AD stablecoin because if you think about the on and off, if you think about the on and off ramp issues that we have, especially across our region, an AD stablecoin becomes an on ramping mechanism, right? It just onboards people. Open. You're literally onboarding a whole community in Web3.
Yeah.
That's why Circle invests in it's a network building.
Play.
Yeah, absolutely.
But in a network play like this, like from a banking perspective, do you still believe the banks have a role to play? Because technically, when they onboard USDC, the DeFi world and crypto world is their oyster, you know?
I think our customers would want to work with a bank, right? If you think about, again, I'm not talking about those that have already converted. Yeah. I'm talking about, so for instance, in the US, and my statistics might be obsolete, but 23% of affluent customers have started looking at, digital assets as an asset class, and then started, allocating a percentage of their portfolio towards digital assets, right? What that means is 77% is still not converted, right? Now, if you think about you know, again, if we just look at stable coins, right? If you think about how do you drive adoption, and then there would be a section of, or a segment of you know, a population out there that would be comfortable taking a bank-issued stable coin just because if it's regulated, and then if it's local currency denominated, and then it's issued by a bank, and then they would trust that if something goes wrong, I can get my money back, right? And so there is a role to play for a bank in this area. And in fact, that's specifically the reason why the central bank would first start working with the banks to issue stable coins, right? Because they know that this will be the best way to sort of drive adoption.
Yeah, I mean, frankly, if I was the banks, I would also very actively lobby to make sure I have a role to play in this. Otherwise, it can really, it's a massive revenue. I mean, the one thing people don't realize, you don't think so?
No, I don't think so. Because I don't think the banks are lobbying. I think the central bank is actually wanting to work with the banks.
But this is a very UAE unique thing where we have a great central bank that is actually driving forward innovation. I would argue in 90% of countries, the central bank is behind the banks. Here we have the central bank that is, frankly, pushing the banks forward. If I was a CEO of a bank here, I'm making enough money with my remittances, other people moving in, doing mortgages. Why would I bother? It's the same management for 20 years anyways, right?
And that is exactly why I don't think you know, the banks are actively trying to lobby, trying to get into this space, because again, there's enough going on, right? And so,
profits are good.
yeah. But if you think about, is there a role to play for the bank? I think again, I would flip that question and say, is there a demand for banks to come into this space from a regulator's point of view and from an end user's point of view? And I think the answer is yes.
Yeah, of course, Miriam, go ahead.
Yeah, if you think about sort of what's happening in the fiat world,
Yeah.
all of that is going to move on chain. So a bank will make, you know, better revenues probably and more
Yeah.
profits. If you think about FX on chain and is being built around that, there is actually a whole lot of banks to join this. A central bank's perspective, I think the central banks usually look for neck to choke. And it's so much easier for them to do it through a bank than to do it through a private player.
Yeah, it's a very, very good point, actually, on that perspective. You know, let's say also, I think a lot of people underestimate today how much international trade is taking place using stablecoins. And if today you're somebody in Malaysia, want to do business with a company in Africa, good luck doing that transaction with letters of credit, bill and lading, or using your commercial banks. I mean, that doesn't work. That's why I think there's a massive understatement of how much, and the money is being captured by the OTC desk, who are basically doing the on-off ramps and the FX between FX and stablecoins, right? So, very interesting. Guys, we have 5 minutes. I'm going to go, my best friend, the Bell, is here with me. We're going to go through a 5 round of questions. So I'm going to ask quick answers, and I need 1 or 2 word answers, okay? And then we're going to start from you, Peter, and we'll come back, and we'll go back and forth. You guys are ready? I'm going to start with an easy one. What's the one thing you like about living in the UAE?
Adoption.
Adoption of crypto. Here we go. Giovanni.
Safety.
Safety. Beautiful.
Ease of living.
Ease of living. Miriam.
Progressive regulations.
Wow, look at what a diplomatic answer.
Miriam, wow.
My God. I hope the circle management can hear this.
Media trade.
DJ.
Quality of life.
Quality of life. Okay. You guys are all in the crypto space. What is the one thing that is keeping you up at night in the crypto space that can make things go wrong? DJ.
Again, lack of regulation.
Lack of regulation. Miriam.
Another Luna.
Another Luna. Miriam.
Regulatory inconsistency.
Okay.
Unregulated 100x leverage.
Unregulated.
Unregulated 100x leverage.
Wow. Yep. That can be always an issue.
Bad reputation of web crypto as an industry in the eyes of the retail people and mass.
Yeah, we have a lot of those crypto degens. I call them the crypto marina crowd. They're not what we want to have. If you're not in the crypto industry, what other industry would you be in? Peter, I'm starting with you. If you're not in crypto, what other industry would you be in?
AI, I think.
AI. Giovanni.
I'm in AI already.
AI.
Legal. Legal.
Legal, of course. The lawyers always spoken. Miriam.
Longevity.
VC, great.
No, longevity.
Longevity, yeah, another great area, actually.
Banking.
Banking, you go, man. You love the banks, huh? My God. Another one. This is an interesting one. I'm starting from you. If there is one crypto asset you're going to hold for the next 10 years, you're not allowed to sell. What crypto would you hold?
Bitcoin.
Bitcoin, Miriam?
Yeah, Bitcoin.
Bitcoin?
Bitcoin.
Ditto. Bitcoin.
Bitcoin.
Solana.
Solana, here you go. The DeFi maxi is here. Interesting. I'm starting from you, Peter. If you could go back to school today, what is the one course you would take that you wish you had taken when you were young? If they offer that in university.
Hopefully.
Here you go, Giovanni. What class would you take?
Same that I took, psychology.
Psychology.
Coding. Coding.
Yeah, coding. Very good.
Finance.
Entrepreneurship.
Entrepreneurship. Here we go. It's another tricky one. Gary Gensler calls you for lunch. What do you tell Gary Gensler over lunch? I'm starting with you. I'm sure that's a Korean restaurant that you cook. Miriam. What's your problem, Tequila?
You suck, bro.
You.
How is going with your friendship with FTX?
This is another interesting one. Recently, HBO said that Peter Todd is Satoshi Nakamoto. Peter Todd, 39-year-old Canadian. Do you believe it's Satoshi? Yes or no?
No.
No.
Nope.
Interesting, huh? You guys are all. Why is that? I don't think it's. Really? Come back to that. If you could go back, I'm going to start from you. You can go back and live any period of history. You can go back in history and live any period of history. What period of time would you live?
The end of
The knowledge we have today.
Yeah.
Oh, yes.
Doc.
Indian independence era.
Oh, here you go. I love it. Patriotism there. Miriam.
I wouldn't. I think we're the luckiest generation.
Yep.
Same here.
Luckiest generation, of course. And to finish it off, to finish our panel, Stablecoin Redefined, my question, I have everybody who comes on my TV show, on my podcast, and I'm starting with you this time, DJ. If you could have lunch or dinner with one person, dead or alive, lunch or dinner with one person, dead or alive, who would you have lunch with?
Sheikh Mo.
Sheikh Mohammed. Amazing. Your grandmother, very nice.
Amitabh Bachchan.
Really interesting. Giovanni.
Alexander the Great.
Alexander the Great. And Peter, to finish it off, the panel at RAK DAO's event, Stablecoin Redefined, who would you have lunch or dinner with?
Donald Trump.
Donald Trump. My. Here we go, guys. Thank you very much. A big applause for our panel. Thank you very much, everybody, for making time. We'll see you guys later today. Thank you.